Hi, my name is Dion, and this is the Bullion Vault. Hi, Willem. How you doing?
Good news, Dion.
Good. So this is episode 22, and we decided we wanted to look into one of the PGMs this week. So we're gonna go with the second best performing, or probably the third best performing. Actually, no.
It might be a little bit lower than that, I think. Yeah, it hasn't been doing well. Let's face it.
Yeah, so just on that, and we're going to be chatting about Palladium, but it's got an interesting story. But just a quick little sum up of everything. Gold has kind of stabilized. We see it sitting around $3,300 an ounce, give or take
$50
50
or
odd
so.
dollars or
Yeah.
so. But again, it's that lateral movement, it's the wait and see, the tariff discussion, which is also going to go into one of the other things we're going to chat about today, which is specifically about South Africa, our current growth rate, which is horrendously low. Or it's actually, and then you look at the rand a dollar and we're sitting around 17 rand 80, and people say, oh, the rand's strong and it's doing well. But you look at the fundamentals and it paints a different picture. But we'll get into that a little bit later. Also, silver's doing very well. Again, it's sitting in the mid 30, mid what's
34, mid 34s, round about there.
yeah, and again, that's very clear of its performance. Again, it's been consistent. The dips have been far less and smaller than previous years, so it's definitely in our mind building up to bigger things. And then yeah, platinum. We chatted just before the podcast, and it's actually doing really nicely.
Yeah, it's back up over $1,000 an ounce. And yeah, as you said, it seems that the little ADHD brother silver has been taking its Ritalin. It's actually quite stable at the moment, as you said, above $34.50 an ounce. Gold, same. Every time we think, okay, well, this is it. It's going back down now. It does take a dip, and then suddenly it just sort of recovers to that mid 3,350 roundabout there.
And what's interesting with that for me is it speaks about, and again, we're going to bring the South African economy into this, but it speaks about the underlying fundamentals. The US economy, regardless, I know Trump has been pushing these tariffs and so on, creating a lot of hoo-ha, and we're going to boost the US economy, but the fundamentals speak of a different story.
And yeah, well, I mean, if I'm correct, the Supreme Court has told him no, he cannot just unilaterally impose tariffs now. And, so they're reviewing that. And while it's under review, he's allowed to impose them again. And we're back to what the heck is going on. We've got so much uncertainty about what's going on. And people want gold as soon as uncertainty kicks in.
And again, you look at it, the central banks have been continuously continuing their buying, and that hasn't slowed down. There's been a little bit of a reprieve, and hence that drop in price, but it's back up, and it's back up and running to the levels prior.
I think the biggest thing that we're seeing is, every time it hits this upward spike like 3,500, there was a massive sell-off. There was big profit taking, and yes, we saw the effects of that. We saw the dip right after that, and we thought, okay, well, there we go. It's hit that spike. It's gone down. So there we're going to sort of build from there, and then it just climbs back up. And once again, it got back up there. There was profit taking. There was the dip again. I mean, it was around about 3,200. I'm not sure if it actually dipped under that, but it really dropped quite a bit. And we thought, okay, well, there's the dip now. It's going to sort of just stabilize there, and it's back up to 3,350, which is, it just shows the resilience of gold and the absolute uncertainty in the global economy at the moment.
Yeah, and again, this is the world we're living in right now. It is very clear that even with all the distractions, the basic fundamentals of gold, of its need, of its requirement in a very uncertain world, both geopolitically and economically, is still there.
Yeah, definitely. And I mean, as we spoke about the gold silver ratio earlier, or in past broadcasts, where we were talking about the fact that it's sitting at 100 to 1. I mean, that's insanely high. Um, and I think as I continue to say, we're going to see that gap close, but it's not going to be because of gold coming down.
No. Again, if there is a massive spur within the industrial sector, which does govern the silver price, we know silver has got an investment value to it, which is a big component of its pricing. But the big driver for silver, like with platinum, is its industrial applications. And again, those have been running at supply deficits for the last 3 years.
Definitely. I mean, silver is second to oil, I think, in the most useful and the most
Used
used
commodity.
commodity on the planet. You know,
Yeah.
it's electronics, it's solar panels, electricity, wind turbines. The bearings and stuff are made out of silver, and the amount of chemical processes that require silver. I mean, washing powder. We've got silver in our washing powder. So it just shows you exactly how useful silver is, how much we use silver, and how great the demand is. And the fact that it's only sitting at $34 an ounce is quite shocking.
Absolutely. I think let's get straight into it. So we were wanting to carry that story on with breaking down other precious metals, other metals that have some consideration to investment. Palladium was the poster child of the PGMs, the platinum group metals. But again, it had this massive rise. You know, in the early 1980s, it was sitting probably around $500 an ounce. It then dropped into under $200 an ounce, and then considerably grew over that period of time to a peak in 2020, and then again 2021, and then a final peak of by the end of beginning of January of 2022.
Actually, it was 7th of March 2022. It hit $3,429 an ounce.
And that was the absolute
That was
top
its
end. Yeah.
all-time high.
Yeah. And then from that point, and then what's been interesting is it's had this complete pullback. Now, there's a lot of factors, and that's part of what we want to discuss is like why, or what happened to this metal that was doing so well, being used in autocats, and so on. So there's a bigger story behind this, and that's part of what we're going to discuss today.
Okay, so let's start with platinum. As we pretty much gathered by now, it's part of the PGMs, the platinum group metals, element 46, and you know, it has a lot of the same properties as platinum. In, you know, it's useful for catalytic conversions or as a catalyst. And if we look back at, you know, we're talking about when it was basically worth nothing. It was mostly as a byproduct from nickel and where did I put this now? Uh, Platinum and nickel mining. It was actually a byproduct and wasn't really seen as very valuable or of much use. And then, you know, platinum, as we were saying, is huge in the auto catalytic converter market. You know, it was used in the 70s and 80s as the main element in the AutoCADs, and this carried on until, as you know, in the 1990s, the price of platinum went absolutely ballistic. In fact, I think it was 2008, it hit an all-time high of $2,250 an ounce.
Mm.
And at that stage, palladium was lagging way behind. So basically what happened, one of the big things that happened was auto manufacturers sat there and said, why are we paying $2,250 an ounce for platinum when we can get palladium that pretty much does the same thing for a lot
Yeah.
cheaper?
Yeah, and again, they got very similar characteristics as far as the autocatic catalytic market's concerned, and they were able to substitute the high priced platinum with palladium, and hence then its meteoric rise.
And yeah, that's exactly what happens. It is supply and demand all over again. Suddenly there was an increased demand for palladium, and platinum sort of went by the wayside, which means the price of platinum started dropping. At the moment, it's sitting at about $1,084 an ounce, which is actually doing quite well over the last few weeks.
Yeah.
And palladium is now sitting at $996 an ounce. So you can see that drop from $3,500 an ounce to 996 in the space of 3 years, which is quite shocking to be honest.
What's quite interesting during that period of time is there was a definite shift from an investment perspective. And now we're talking around 2022, or the around, I think it was mid to late 2021, where already there was a massive surge from an investment perspective. I remember the figures were about a 148% increase in the demand from investing into platinum.
Yeah, actually, I mean, the investment demand was, well, this might be a little bit dated now, but it's still the best data we've got. It was 168%. And while the demand for palladium at that same time was minus 68%. So, there was a great demand for investment of these products. But on the other hand, in the autocatalytic converter segment, platinum demand was 21.3%, while palladium was 71%. And that created a problem. Because if we look at the in situ ratio, now that is the ratio in which these elements naturally occur in the Earth's crust.
Yeah.
It can't be changed. That's what's there. If you
What's
go and
available?
dig,
Yeah.
that's what's going to come out. There's nothing you can do about it. And platinum makes up 41.8% of that, and palladium 52.7% of that. And then we've got rhodium, which makes up about 5.5%. Now, already you can see where this is going. 71% demand, however, it only the quantity that it exists is 52.7. There's this massive imbalance, and obviously that's why the price went absolutely ballistic, because the demand was far outweighing the supply. And this caused another thing that caused an issue is Russia is the biggest supplier of palladium in the world now.
Yeah.
Firstly, due to everything going on there, there's, let's say, a distaste for things coming from Russia at the moment. And secondly, they've got a massive issue with permafrost melting, and that is causing mines to collapse, making it a lot more difficult and a lot more expensive to actually, a lot more dangerous, in fact, to actually mine this stuff.
I remember when we originally looked at this and they mentioned permafrost, and it was my ignorance where I thought permafrost is a couple of meters, maybe 50 meters deep, but it's hundreds of meters deep. And again, if from a mining and operational perspective, is if those mines start to become filled with water, they cannot actually extract the ore out of those actual ore belts because they flooded.
Yeah, well, that's only half the problem. I mean, you've got this permafrost. Now, it's basically the ground is frozen solid, it becomes like rock.
Yeah.
And they mine into that. Now, this is melting. Firstly, you've got the water problem, but secondly,
Structurally.
structurally, it
Yeah.
loses its integrity, and you've just got these cave-ins. So now, instead of mining into rock, you are mining into dirt, and I mean, you can just imagine the danger that poses.
Yeah, and again, I love the way you put it with Russia. So the interesting thing is South Africa is the biggest platinum producer in the world of the PGMs, and then as you mentioned, Russia is the biggest palladium producer. So it's interesting around this time is when the Russian-Ukraine war started, and again there was that sudden shift. There's also a shift from the AutoCAD sector where they were starting to go back to platinum based on the price to value ratio.
Well, the other problem is that palladium is a little bit harder than platinum. If you look at it on the Mohs scale, platinum sits at a 4, palladium sits at a 5. However, platinum is significantly denser than palladium. So that's sitting at about 21.45 grams per cubic centimeter, while palladium is at around about 12 grams per cubic centimeter. And that means it's got a lower melting point. Platinum has a higher melting point than palladium. And the problem is that doesn't work very well in diesel engines because you've got much hotter exhaust gas. So palladium isn't especially well suited for diesel engines. And if you think about most of the traffic on the road, it's trucks it's freights. A lot of people are driving diesel cars. So you've got a lot more diesel coming in, and it's causing a bit of an issue. And therefore, yes, they are looking at platinum and they're going back to platinum again. Also, up until now, it was cheaper.
Yeah, and again, it's interesting. I remember 20 years ago, most people drove petrol driven vehicles, and then suddenly the turbo diesels, actually the efficiency of those motors improved so much so that it's become very dominant even within the sedan and the bigger population market of vehicles.
Yeah, diesel isn't just tractors anymore.
All tracks, yeah.
Yeah, I mean, you driving a diesel.
I am.
So yeah, that's the thing. It's because you get a lot better fuel economy out of the diesel vehicles. And they produce a heck of a lot of torque. So there's a big case to be made for diesel vehicles.
And again, it's efficiencies. You're using a turbo driven motor, the efficiencies, the range, and all of those things play into it. And like I said, 20, 30 years ago, those motors were not as efficient. And again, you then look at the actual auto catalyst, and those are not going to go away. So the demand for platinum within those is going to remain for still a long period of time. But we haven't also told the other story of platinum and where it's going and its relevance.
Definitely, and that of course is hydrogen.
Yeah.
Hydrogen, the new green economy, and platinum is still the best catalyst that they found for hydrogen fuel cells. And as we're moving away from internal combustion engines, I mean, what's it, 2035, I think, is the deadline when in Europe you're no longer allowed to sell an internal combustion engine.
It's crazy. That keeps getting kicked out from when it originally was proposed. But that's very important. Interesting enough, I mean, the amount of hybrids that are available in the market right now, the amount of electric cars. I mean, no one would have thought it would have been feasible on the African continent, yet it has taken shape. They are building that infrastructure. Again, silver supports the auxiliary infrastructure for electric vehicles.
Definitely, and I mean also in the motors itself, you require a lot more silver to actually manufacture a electric vehicle than you do for an internal combustion engine.
So just in short, I mean, if we look at the palladium price, the reality is, do we see it going up? Do we see the demand going back to those levels? My personal feeling is, I've said this all along, that platinum still has a stronger case to be heard and had, where we know that the move, as you mentioned, the demand for it within AutoCAD makes sense. And again, it's demand into the hydrogen thing. And simply all it is, basically, it would be that catalyst taking a gas and converting it into electricity. And platinum shows unbelievable characteristics that nothing to date has actually come close. And that's even the harvesting of hydrogen.
Yeah, I mean they are desperately looking for a replacement and they haven't been able to find one. It's they've been experimenting with a bunch of stuff and nothing has come close to the longevity and the efficiency of the platinum uh, catalyst.
Just, I just want to then go on to Basel 3. We spoke about it last week, or was it the week before? But again, there's been some new updates. The Gold Council released some new data on that. Do you want to maybe just cover that?
So basically, what it comes down to is, they compared gold to your traditional, what do you call it, the high quality liquid assets,
Yeah.
and they compared gold to your traditional stuff, your traditional investments, and basically what it comes down to is gold has all of those characteristics. It shows all of the characteristics of a high quality liquid asset.
And what's interesting is if you see on a daily basis from bonds, stocks, equities, the whole lot across the board, that second to the Dow, the S&P 500. Second to the S&P 500, gold is the most traded asset or commodity and I'm talking across the board, from the Dow, from stocks within the Europe, the bonds within Europe, across to the States, all over. That gold is the second most traded asset on those market within the market.
I think it just proves that it is a store of wealth. It is a hedge against inflation. It is a trusted safe haven asset, not only to individuals. I mean, yes, you might have your private investors buying up a few ounces, 100 grams, maybe a kilogram of gold, but you've got central banks across the world buying up tons of this stuff.
Yeah.
And yeah, that just, it actually just points to what a high quality asset it really is. And liquidity, I mean, if you have 100 gram or an ounce of gold, you can literally walk into any major mall in the country,
In the world.
in the world, and there'll be somebody somewhere sitting there ready to buy your gold.
Yeah, it shows that liquidity. Again, I think there's a lot to run in the story with regards to Basel 3. It's still going to be implemented as a tier one asset come the 1st of July. So that's still on the cards. It's now just the definition within that status, as you mentioned, the HQLA status. Where does it fit? What we'll do is we will attach a link to that actual article from the Gold Council with regards to the technicals, because it's actually very technical, and to go into that would just cause a lot of confusion.
I mean, yeah, just reading through it does cause confusion already, and you're just thinking, what on earth is going on? But yeah, if you want to digest it, go and have a look at the article. It's really very interesting.
And again, for me, it still highlights the importance of that gold is now placed as a tier one asset. Do I think that the fact that it hasn't got the full liking of a tier one asset, that it holds the HQLA label, that I still believe will come. Again, as you mentioned, liquidity. There's a number of criteria that needs to still be ticked to get that final push over the line. But again, and we've spoken about this, a tier one, a tier three asset would have leveraging as far as getting credit, or as an asset would be leveraged at a certain percentage. As a tier one, it definitely gets an elevation. And that, for anyone holding gold, is critical.
And I think especially for institutions like central banks, like your JP Morgans, your Goldman Sachs, those places, to now have that gold valued at 100% is going to be something significant.
And the US government, let's not forget.
Well, yeah, central banks, US government, China, well, they still need to go check if it's there.
Well, and our good friend Elon is supposed to be doing a good job of it, I guess.
They've been talking a big talk about, we're going to check if it's there, we're going to broadcast it. They still haven't had, when to have a look, which is quite surprising because they were making a big song and dance about it.
Well, let's see. And again, this is the thing, is we are in that we're building towards it. There's a lot of uncertainty. The US stock markets have been slow. GDP growth rates within the States aren't great. But now we're going to talk about South Africa. And, what we had in the fourth quarter of last year was a 1%, or it was 0.7.
0.7, I think.
Yes, growth rate. And then the first quarter of this year, we've got a 0% growth rate.
Yes.
So let's look at that. And I mean, the main thing there is the tariffs from the States, or the embargo of those tariff that we were enjoying, free trade, or preferential trade with the States through the GO agreement. Suddenly, this across the board tariff increase has actually hit our economy very hard.
And the biggest problem is one of our biggest sectors, which is auto manufacturing, believe it or not, has been hit particularly hard with 25%. That's the biggest issue we've had, or one of the biggest drivers towards this. I mean, to suddenly have one of your biggest industries get slapped with that is quite significant. And, we're still struggling with a bunch of other stuff like electricity. yes, it's gotten a lot better. We haven't had widespread, constant load shedding for quite a while now, but it's still an issue, and this is going to be an issue going forward. We were just talking about electric cars. Imagine if, let's say 50% of the cars on the road is suddenly replaced with electric cars. We barely keeping the lights on as it is now. Everybody gets home, plugs in their car, and yeah.
Yeah, well, essentially what you're talking about is a capacity issue, and we just not keeping up with it. And again, there is historical reasons for it. That in the previous dispensation, previous apartheid government, there was allocation and power for, of course, the whites, which was a minority to the majority. Suddenly, we have the new South Africa coming into play, and the actual push and drive to increase capacity was done very slowly, and certain constructions or projects that were put into place like Majuba and some of them where it was said we will do it within 10 years, they still not complete until still not to full capacity.
Definitely, and that is a massive, massive problem that we've got at the moment. Is the increase in infrastructure, is the increase in capacity to keep up with the demand? I mean, if you look at something like Operation Vulindlela, it's the idea was to get all of these things in place to increase the electricity supply, to stabilize the water supply, to increase infrastructure for freighting, and already it's lagging way behind, and that's the problem. It's always easy to say this is what we're going to do, but actually getting there and doing it is a lot more difficult.
And again, why we actually talking about this is it goes back to the rand dollar, and yes, the rand has strengthened. It's sitting around 17 rand 80 odd to the dollar, but if we take a step back, it's quite a lateral move. It hasn't really dropped in any massive value.
Well, the question is a lot of the times, has the rand strengthened or has the dollar weakened? And in this case, I think a large part of it is that the dollar is a bit weakened at the moment.
100%. And then the second part here is if we look at what the Reserve Bank had their expectation for growth, well, they were looking about one. Originally, they said about 1.7 for the year 2025. They then did a review and they said no, 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 1.2. We've done first quarter and we're sitting at a 0% growth rate. So they've got a lot to make up within the next 3 quarters.
Which is especially concerning, seeing as the target was 3, I think.
Correct.
3%.
And these are the things that aren't really discussed. And again, this is what's going to hit us with regards to revenue. This is what will have the knock-on effect where we'll have government fighting about a 0.5% increase in VAT because they're desperate for revenue because they're not meeting their what they actually owe versus what they're receiving.
And even bigger concern at the moment, if I'm correct, we're due for a ratings review
Yes, yes.
very soon.
And again, that's again based on the current data. I can tell you now, with a 0% growth rate over the first quarter, we've seen that it's an issue. And we do know that the whole debacle with the 1.5% to 15.5% VAT, and then the pullback within 2 weeks of it to be implemented, shows that there's a desperate need for revenue. However, we're not meeting that need to cover our costs.
And I mean, just everything basically is not looking rosy for investors who might be thinking of investing in South Africa. You know, as I said, yes, I must commend them. Eskom has done a brilliant job lately of keeping the lights on. It's very easy to go off and shout at them and say mean and nasty things when the lights go out. But look at where it's come from 2 years ago, 3 years ago, where it was constantly every single day we'd have 3 or 4 blackouts, to now where now and then we've got a little bit of stage 2 load shedding. They've done a brilliant job, but it's still not enough, firstly.
No, and again, it's suddenly when that capacity jumps or there's a demand, that's when we have these load shedding models coming into play to kind of manage the system from completely collapsing. That said, and it's interesting, I mean, we do live on a continent which is growing. Unfortunately, our growth rates are not great, and it's surprising if you think of the rest of the continent. But load shedding is a known fact throughout, be it in Zambia, Zimbabwe, Nigeria, across the board. Most countries have some form of load shedding. In other words, energy demand exceeds the actual supply across the continent.
Definitely. And I mean, if you think about it really, we are experiencing growing pains now as a country that Europe has gotten out of the way decades ago. America got out of the way decades ago, etc., etc. We are experiencing these growing pains now for the first time, and it might not look good on paper, but if we can get through this intact, then I think we're definitely going to thrive.
In closing, Willem, I mean, any other thoughts?
Yeah, as I said, it's a bit concerning with the ratings review coming up. I don't see that going very well.
Yeah, also what's very concerning is that there is also we due for another a review on the lending rates that's coming in, and there is talk that they're wanting to increase it. Again, it's revenue driven. The South African Reserve Bank SARS, they desperately needing more money and revenue to cover these expenses, these loans, the interest on the loans that we've discussed before.
And it is a problem because, what they did in the past was we'll take another loan and we'll take another loan. And suddenly now they're going, hang on, we need to pay these back. And it's not going to work to take another loan to pay the loan back. Eventually, everything needs to be paid back in dollars. That's the biggest concern, is they're not accepting South African rands. It needs to be US dollars. So thankfully, the rand has strengthened a little bit. But as soon as that starts to slide, as soon as the dollar sort of starts to get away again, it just becomes that much more difficult to actually pay it back.
100%. Willem, in closing, if people enjoy the content and what we've been discussing today,
If you enjoyed it, leave a like. And if you want to see some more, be sure to hit the subscribe button. And we'll see you guys in the next video.
great. Thank you. Cheers. Bye bye.